Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we are looking into the latest financial report from Kraig Biocraft Laboratories. It might sound like something out of a science fiction movie, but let's see if their financial reality is as exciting as their name suggests. Think spider silk stronger than steel? Are their profits as strong? Kraig Biocraft Laboratories is trying to do something pretty cool, using genetically engineered silkworms to make high-strength spider silk. Imagine clothes, medical devices, even bulletproof vests made from silk. The big idea is to create these materials without using harmful chemicals, making it environmentally friendly. It sounds like a game changer if they can pull it off, but there's a warning flag right at the beginning. The report from their independent auditor says there's substantial doubt about Kraig Biocraft's ability to keep going as a business. This is because they've been losing money and don't have a lot of capital. It means they might not be able to pay their bills or invest in their projects without big changes. To address this, they've made a deal with an investor, YA2PN Ltd. This agreement, signed in January of 2025, gives Kraig Biocraft the option to sell up to $10 million of its stock to the investor. It's like having a credit line but using company shares instead of cash. The catch is that Kraig Biocraft isn't required to sell any shares, but the investor also can end up owning more than a small percentage of the company. This deal could provide the money they need, but it also means current stockholders' shares could become less valuable if they sell a lot of new stock. Like many businesses, Kraig Biocraft felt the impact of COVID. They had to temporarily shut down their silk production in Vietnam. They supported their workers and used the downtime to improve their facilities, adding things like a microbiology lab to boost quality control. They're also trying to be more self-sufficient in getting the supplies they need. The company is trying to tap into the technical textiles market, which is huge. By one estimate, it was over $200 billion in 2024. These aren't your everyday fabrics. They're used in everything from medical supplies to military gear. The company is spending a lot of time trying to create new materials with genetic engineering. They're working with silkworms to develop unique and new fibers, but also focusing on increasing the overall strength and robustness of their silkworms. To protect their ideas, Kraig Biocraft has a mix of patents they own and technologies they license from universities like Notre Dame. They have a patent in South Korea, Vietnam, and Canada. They believe these countries will be beneficial to their operations. Like any modern company, they're aware of cybersecurity risks. They have processes to manage these threats, but admit it's a constant challenge with rising costs. As of the report, they don't believe any cybersecurity incidents have significantly hurt their business. The company's stock trades on the OTCQB market under the ticker KBLB. Keep in mind that these markets can be volatile. As of March of 2025, the price of their shares was very low. Now let's dive into the most important part, the financials. I'm going to mention a few key numbers here and there. So if numbers make you sleepy, try to pay attention. For the year ended December 31, 2024, Kraig Biocraft reported $0 in revenue, and the same was for 2023. So essentially the company is still making no money. Spending on research and development decreased about 31% down to $169,474. But what's more striking is their professional fees, which shot up by about 132% to over $290,000. This increase was related to investor relations services. Officers' salaries also increased almost 10% to over $872,000. They are also paying a lot in interest. That expense was over $529,000, about 9% more than the previous year. So it is clear to see the company is struggling to cut down its expense. Net change in unrealized appreciation on investment in gold bullion increased by $77,844 2033 to $1,824 2023 for 2024. Putting all that together, their net loss for the year was almost $3.4 million, which is about a 12% increase in net losses from last year. This all means they're burning through cash and will likely need more funding to keep going. The company's cash on hand significantly decreased. They had only $673,264 US and $831,834 the prior year. Their debts also increased. The report goes into some details around accounting policies and standards. What's more important is note 2, which discusses that previous warning we mentioned, their ability to stay in business. Finally, the report lists all the exhibits, including the CEO's certifications confirming the accuracy of the financial information. Wrapping it up, Kim Thompson is the president, CEO, CFO, and director. Basically, he's running the show. We also see that the company maintains a code of ethics applicable to its CEO and CFO Doffiso. What's the overall story here? Kraig Biocraft is clearly facing some tough financial challenges. Their expenses are high and they're not making any money. They're trying to stay afloat with new funding agreements, but it's unclear if that will be enough. The company is relying heavily on agreements with the CEO in order to make ends meet. What's more, the company seems to rely on a few insiders to stay afloat, which might create conflicts of interest and other concerning behaviour. That is unknown when and if the company can turn it around and create value for shareholders. What's really going to matter is whether this spider silk technology can really turn into real revenue. Tough field. Thanks for watching. Please subscribe, like and comment below.